Hi, this is Tim Kelly from Breakthrough Insurance Group, and welcome to The Big Idea. As you may have seen over the last year or so, fixed annuities have done really well in the market due to the fact that interest rates are so high right now and there has been so much market volatility. And so your clients may be looking for a safe investment, and therefore they're going into fixed annuities, and a lot of times they're using multi-year guaranteed annuities. Now MYGAs are offering very good interest rates right now, somewhere in the 5% range for 3 and 5 year products, which is really great. Unfortunately, however, the inflation rates are tracking higher than that, so your clients may actually be losing ground even with a 5% rate of return. The answer to that problem is using an indexed annuity. Now, indexed annuity gives you much more upside potential than that 5% guarantee, with very little downside risk, if any at all. In most indexed annuities, there's a zero floor, so you can never do less than zero. In other words, you can't lose money. However, I want to show you a product today that offers so many guarantees that the floor is even higher than zero. So by going into this product, you're giving your clients much more upside potential than a MYGA and a higher floor than zero. So this is the Athene Protector product. This is an indexed annuity, and it has a couple of guarantees in a rider that is offered. The rider is for a cost, and that's 40 basis points per year. So let me just go through for you a couple of the guarantees inside of this rider. So first, they have a return of premium rider. And so that guarantees your client that no matter when they want to get out of the contract, they will not have any surrender charges. So in other words, down here, if you look at the 5-year product, if they put in $100,000 and in year 2, they want to get out, they are guaranteed to get their 100 grand back. So the return of premium rider guarantees that they will get their money back. Secondly, there is a minimum interest credit guarantee that says after the surrender period is over, in the 5-year product as an example, they have a 15% interest credit guarantee. So even if your client has gotten zero interest over the 5-year period in their indexes and they have less than 100 grand in the product, they will have 115,000 in the beginning of year 6. So a 15% interest credit guarantee at the end of the surrender period. So let's look at a couple of examples, and this is the Athene Protector 5 product. The client puts in 100 grand. They receive zero interest over the 5-year periods. The markets do terrible over that 5-year period. And at the end of each year, they have available to them $100,000 with the return of premium guarantee. And then at the end of the 5 years, they will be credited the 15%, so they have at least $115,000 in the contract. If we go down to the 7-year product, you can see the same exact return of premium guarantees over here on the right-hand side, $100,000 guaranteed if they want their money back. But at the end of the 7 years, they get a 20% interest credit guarantee, so that they will have a minimum, they're guaranteed a minimum of $120,000 after 7 years. So if you look at the 15% guarantee in the 5-year product, the 20% interest guarantee in the 7-year product, that equates to about 2.5% interest compounded. So in that way, you don't have a zero floor. You have about a 2.5% interest crediting rate floor in this product. So again, 100% return of premium guarantee, about a 2.5% interest rate guarantee in the minimum interest credit guarantee that's available in this rider, all for 40 basis points. And at the end of the surrender period, the 40 basis point charge goes away. So let's take a look real quick at the Athene Protector 7 product guide. So let's just look at some of the different options that are available for your clients to invest in. There are multiple indexes here. It looks like there are 5 different indexes that your clients can participate in. A couple of note are this BNP Paribas 230% participation rate right now, and over the last 10 years, the average annual rate of return for this product has been just under 10%. So now think about that as upside potential for your clients. Instead of that 5% guarantee that they get in a MYGA, they can, historically, this has averaged about 10% over the last 10 years. Another one I wanted to mention is this NASDAQ FC at 135% participation rate. That has averaged over the last 10 years over 12% annual rate of return. If you like the S&P 500 annual point-to-point, which you see right here, that has a cap right now of 10%. So over the last 10 years, that has averaged just below 7% in the simple S&P 500. And there is a bailout cap rate on this product as well for the S&P 500, which states that if the cap is ever reduced below 5.5%, your client can get out of the contract with no surrender charges. All right, so again, they have a fixed account at 4.3% right now. It's a 7-year product, and that guaranteed minimum interest credit in this product is 20%. So in addition to that, this is really good for you as well, because generally an indexed annuity in terms of compensation is going to pay a couple of points more than a MYGA does. So this is good for you as well. So feel free to contact your sales directors here, either Vic or Tony, and thank you for watching The Big Idea.